Welcome back. Let's talk about UFlex. That's the stock on our radar, up almost 25% this year. The company reported a mixed set of earnings for the second quarter. On the one hand, while revenues were up 24%, the volumes were down 3%, and the EBITDA was lower as well, as a result of which the margins compressed from almost 14% to just about 11 odd percent. But importantly, they do have a fair amount of capex coming on stream. What does that mean for their business going forward? We have Rajesh Bhatia, who's the Group President-Finance and Accounts of the company, joining in. Thanks a lot, Rajesh, for joining in. The first question is obviously what the current BOPP spreads are, how they've moved versus the second quarter, and going forward, what's your assessment of how margins will pan out? Because you had a target of what, 17 to 18% for the whole year, and for the first half you've done just about 14.5%.
True, you're right. And that is basically because the Q2 we've seen, the Europe has really, has been sort of a dampener because of the high energy prices over there. So we had a situation where, the energy costs there are up for us in Hungary by about 150%, about 50% in Poland, just because Poland we had a little longer tie-up. So the energy costs are playing a havoc. And also the demand side in the Europe is in the last quarter got affected as the consumers had to spend more for their energy bills. So obviously some of the discretionary spend is what where it gets compensated. I think that's been the order of the day. India, we saw one or two capacities coming on stream, which pushed down the prices, and as well as, a lot of exports was happening from India to Europe as well. So which also got curtailed. So the domestic availability increased a bit. So on the film side, yes, the margins did take a beating. But the other sectors for us, which compensated more than that dip, are aseptic packaging as well as the flexible packaging. And aseptic packaging has done about 150% year-on-year growth in the net revenues. We have the core business, which is aseptic, which is the flexible packaging. So that has done about 28% higher revenues, and the margins there in those segments are also good, which ultimately led to a blended margin of a little over 14%. We on a demand side and on the margins coming back to the normal, I think.
Mr. Bhatia, I just want to interrupt you and ask you a little more specifically when it comes to demand, because you spoke about the aseptic packaging segment, and that's done fantastically well for you. Like you mentioned, over 100% year-on-year in terms of volumes as well as revenue. What led to this demand, and are you possibly seeing it sustain?
So on the aseptic side, I think this is sustainable because, it was the first time that we are really focusing on export markets. And that has ensured that, even in a lean India season, which normally starts end of July or the middle of August, we are able to keep up the tempo because the exports are, in fact, this quarter we had the highest ever quarterly exports in the history of UFlex, led by our chemicals as well as our aseptic packaging exports. So those are keeping our plants at a full utilization levels. So that's a very good development, because if we are able to keep those things intact, that will mean that, when the India market goes lean in the off season, that will be compensated by exports, and throughout the year you will be able to run your plants at almost full efficiencies.
Right. At the halfway mark, we're looking at 7,800 crores on the top line for you, little over 3 lakh tons in terms of volumes, and 14.5% margins. Just wanted to know what your targets for the full year are, and in line with what you had given earlier, 12 to 13,000 crores in terms of top line growth is what you had guided for this year, with 17 to 18% margins. Now with demand from Europe being under pressure, costs increasing, etc., where does that guidance stand at?
So I think in terms of top line, based on the H1, we can look at somewhere around 15,000 crores, driven by the fact that Q4 for the aseptic, we are likely to see a substantial increase in revenues over there. So we are looking at from a run rate of about 600 million packs a month to close to about 750 to 800 million packs a month from January. So the flexible packaging business also looks to be good. And that has various subsets also, like holographic, like engineering, chemicals. So all of that is as of now is doing exceedingly well. In fact, the chemical business
and margins, sir, margins.
Margins blended, we still hope that we can complete we can do about 16% for the year as a whole.
Okay, lots more questions, but we've completely run out of time, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of UFlex. Yes, Europe has been a tough geography for them in terms of margins, but they're definitely seeing demand in their aseptic packaging segment, which is done quite well in Q2. Well, we need to take a short break, but on the other side, I'll be talking about a whole host of pharmaceutical stocks which are in the news.